Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, global equity markets have been reeling. Last week we had the fallout from the emergence of China AI startup DeepSeek, and this week it's all been about Donald Trump's tariffs. Yet, when observing the Dow, S&P 500 and NASDAQ, Gary Glover from Novus Capital says a squaring out of ranges has developed, which he says acts like a ceiling technically for the indices for at least 6 months.
The major indices have actually squared out ranges there from the previous pullback there. So if you look at that 22 high back to the 22 low there, there's quite a reasonable sort of range in the market. I think the Dow's basically squared out at 45,000, 100% squaring. The S&P is now squared out. Those sort of squaring ranges there, just in the past when we've seen those indices square out, we've often seen that be like a ceiling technically for the stock or for the indice for at least 6 months. Sometimes it can last 12 months and potentially 2 years. So on this S&P 500, if we can't see it on this chart here, but if we went out and looked at the 0709 bear market, we squared that range out there. The 2015 high was a squaring of that range. I think the 2018 high was 150% squaring. The 2020 high was the 200% squaring. The 2022 high was the 350% squaring. And now the 6123 is a 500% squaring of the range. These squaring of the ranges, I know it's a bit of a Gantt sort of theory around the charts there, but these major squarings of ranges there, they just act as resistance.
WiseTech was a local stock to suffer in the DeepSeek inspired sell-off. David Novak from Wealthwise acknowledges it is one of the premier stocks on the local market, but says it's not cheap.
But it's trading on a really, really high multiple. Look, they've got stellar earnings. They've had great earnings growth, revenue growth, 15, 20%.
So 124 at the moment.
But it's what you're paying for it, So I see it's 124, so it's still below that blue, or it just might be on that line actually. That blue line, you can see that's a trend line going down. If you've got it, you could hold it, but geez, if it breaks below that $115 support level that you can see that's tested at least 3 times there, or nearly 4, that level there to me is get out. If it closes below that, that's an exit as far as I'm concerned. So there's a lot of things happening in the tech sector right now, as we know. Mm-hmm. What happens in the NASDAQ will also follow through here in WiseTech and other tech stocks. But it's not cheap for good reason.
Quality retailers have proved to be strong performers on the local market despite an economic slowdown. Michael Gable from Fairmont Equities analyses Nick Scali.
It's trending well. I mean, some of the major retailers are, they are trending. JB Hi-Fi's back to making new highs. Harvey Norman's just had a bit of a breakout in the past couple of days. This is a weekly chart of Nick Scali. Look, it's not the cleanest looking uptrend, but I can make out some higher lows and higher highs along the way. So yeah, just heading in the right direction. So for me, it's a hold. I wouldn't necessarily be buying it because we could see it's getting very close to the peak from last year. So it might start to encounter a bit of selling, if it gets another sort of 50 cents higher from here. So look, happy to hold. Probably a buy on a dip, I'd say.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.